In today's video, we're breaking down why the iPhone is on the verge of becoming a very expensive status symbol. Buckle up as we explore how sweeping tariff policies are set to upend global supply chains, drive up consumer prices, and exactly why President Donald Trump's actions are being seen as a threat to free trade. In today's fast-paced news environment, one story is causing a stir among tech enthusiasts and economists alike: the abrupt escalation in tariffs that could make the iPhone, a flagship product of Apple, a prohibitively expensive luxury. With tariffs on goods from China now set to hit as high as 125%, the price tags on these popular devices are expected to soar. In this video, we examine the origins, the mechanics, and the real-world effects of these policies while making no bones about who's to blame for the chaos. Trump's tariff announcement and the global trade war. Let's rewind to when the tariff storm began. On what Trump dubbed Liberation Day, the U.S. administration rolled out a two-tiered tariff system. A baseline 10% universal tariff on almost all imports, with steep, country-specific rates imposed on products coming from nations with which the U.S. has contentious trade relations. While some nations received temporary relief, China was not so lucky. The tariff on Chinese imports skyrocketed from previously lower rates to a jaw-dropping 125%. Analysts quickly warned that this aggressive move would trigger a Category 5 price storm, a signal that the costs embedded in these products, especially in tech devices built on intricate global supply chains, could lead to dramatic price hikes. President Trump's actions are portrayed by critics as protectionist and short-sighted, with his rhetoric and policies painting a stark black-and-white picture of American jobs versus foreign suppliers. In reality, the fallout is poised to affect every American consumer. Impact on Apple's supply chain and iPhone manufacturing. Now, why is the iPhone particularly at risk? The answer lies deep within Apple's manufacturing process. Over 90% of iPhones are assembled in China, a country that now faces a tariff rate of up to 125%. This isn't just an incremental increase. It's a seismic shock to the cost structure. For example, analysts from UBS and Rosenblatt Securities have projected that the flagship iPhone 16 Pro Max could see its cost rise by more than 40%, pushing a price from around $1,599 to nearly $2,300 if these charges are passed on to consumers. These tariffs add a steep surcharge on every component imported from China, be it the powerful processors from Taiwan or the high-quality rear cameras from Japan. With a supply chain that's decades deep in its reliance on Chinese production, Apple finds itself at a crossroads, forced to choose between absorbing enormous costs or burdening its loyal customers with sky-high prices. The looming price hike. What consumers can expect. So, what does this mean for you as a consumer? Imagine having to pay several hundred extra dollars for an iPhone simply because of tariffs imposed by a government decision. In some analyses, even entry-level models could jump from $799 to as much as $1,500, while premium models might surge beyond $2,200. This isn't just an abstract economic forecast. It's already spurring panic among buyers. In cities like New York, reports are emerging of customers scrambling to upgrade their devices before prices climb further. Retail environments have been buzzing with frantic energy as people rush to beat what could become an iPhone boom of a very expensive kind. Apple's response: shifting production and strategic moves. In the face of these steep tariffs, Apple isn't standing still. The tech giant is rushing to diversify its manufacturing footprint. Recent reports indicate that Apple has begun ramping up production in India, a strategic shift aimed at sidestepping the punitive tariffs imposed on Chinese goods. In fact, there have been dramatic moves such as chartering cargo flights to airlift massive quantities of India-made iPhones into the U.S. However, these alternative production methods are not a silver bullet. While India offers lower tariffs, around 26% compared to China's 125%, scaling up production to meet global demand is not an overnight process. And even if Apple manages to produce a significant portion of its inventory overseas, the transition period will likely result in supply shortages and continued price volatility. The villainous approach and wider economic fallout. Now, let's get to the heart of the matter. The aggressive tariff policies pushed through by President Trump have been widely criticized as reckless and counterproductive. By imposing these steep tariffs, Trump has not only endangered Apple's streamlined supply chain but also jeopardized the broader global trading system. His policies, rhetorically painted as a move to protect American industry, are instead forcing companies like Apple to choose between crippling profits and exorbitant consumer prices. Critics argue that these tariffs are nothing less than a villain's play, a unilateral, short-sighted attempt to force a trade war that harms consumers, stifles innovation, and undermines international economic cooperation. The costs are already being felt: stock market turbulence, a drop in consumer confidence, and forecasts of higher inflation that could spiral into stagflation. In essence, Trump's tariff policy is turning what was once a world of competitive markets into one of forced price hikes and economic uncertainty. What's next for consumers and global trade? To sum up, the message is clear. While Apple and other multinational companies scramble to adapt to these new tariffs, by shifting production and rebalancing supply chains, the average consumer may well bear the brunt with steeper price tags on everyday tech essentials like the iPhone. As global trade tensions escalate, these policy decisions could ripple through the economy, affecting everything from stock markets to grocery bills. Stay tuned as we continue to follow this dramatic unfolding story. How will consumers respond? Can Apple effectively mitigate these effects? And will the global trading system ever recover from such aggressive protectionism? Let us know your thoughts in the comments below, and don't forget to subscribe for more deep dive analyses on the issues that matter.